What's up YouTube? Dougie Chong here. Welcome to today's episode where I'm going to be going over 5 stocks that are on sale right now. I'll go over the stocks from least risky to the most risky ones. Obviously, the ones with the least amount of risk have the lower amount of returns, and the higher the risk, the higher the possibility of great returns. But honestly, prices were rocketing pretty high. It made sense for a little bit of pullback. Could it go down even more? Yes, most certainly, but it's always better to buy on these dips rather than when the market is soaring higher. At numero uno, we have Facebook stock. Probably the most surefire stock that will go up in the near to midterm future. Unless you think their legal troubles are going to completely destroy them, this stock is set to rocket pretty quickly with its paltry 23 PE ratio for a big tech company. I'll leave a link in the description below. I made a whole video on Facebook just recently, but basically it's trading at under a $1 trillion market capitalization, around $330 today, and is surely to go up. They're expanding into the metaverse, which is just like a virtual reality basically, and I think that is a pretty good space to be in. As a software engineer, I would benefit from more immersive virtual meetings. Also, an augmented reality screen would do wonders for my productivity. If these tools are helpful for some of the most highly paid workers in America, then it's definitely going to be a good business model. Also, there has been a partnership between Facebook and Microsoft Teams recently, between Facebook's workplace platform and Microsoft Teams, which is like Slack, just a team communication tool. I know Teams has definitely made a push to get better, and I like it almost as much as I like Slack. They definitely kind of pushed it with that Microsoft suite of tools like Microsoft Word, Excel, just lumping Teams for, I think, for free in part of the package. Granted, Teams usually just copies a lot of the features from Slack, but they did a great job in scaling up extremely quickly. So I don't exactly know how Facebook plans to make money from this, maybe some premium feature with Workplace, but workplaces have been pretty reluctant to see Facebook as a communications tool as of right now, maybe because its beginnings were more for social outings and gatherings and not for getting real work done. However, if they can find a way to make this business model work, it will be extremely lucrative. For that reason and its low valuation, I think Facebook is a buy right now. Next up, we have Hive stock, the company that makes cryptocurrency miners. They don't actually make the miners themselves, they buy it probably from Bitmain in China or other sources, but they make these giant mining farms, these big warehouses, fill them with the miners, and mine the cryptocurrencies directly. Since recently hitting highs of just over $6, it's pulled back to around $5 now. I sold a bit at around $5.40, and I'm gonna wait until it hits about $4.50 for me to buy back in. I think I got most of my shares for around $3 something cents, so it's still a bit higher than that. With Bitcoin recently hitting all-time highs, this stock stands to gain a lot from all their cryptocurrency mining investments. Furthermore, the China clampdown on crypto helps this company out as their mining farms are not in China, but they're in Canada, Sweden, and Iceland. This stock is also good if you're trading on the Toronto Stock Exchange. You don't need to pay that pesky conversion fee to invest in US stocks. So for those reasons, I'm thinking Hive is either a buy to start now or a buy in the near term future if it dips a little bit more. Alright, now on to Lightspeed stock, or LSPD. They make point of sale solutions and are kind of a smaller competitor to things like Shopify. Since hitting highs of around 160 Canadian dollars and sitting close to $84 now, those 50% drops, that's usually a good time to buy a stock. Now their hit in their stock price is not unjustified. They missed, I think, earnings or revenue, one of those two, so their metrics really are not that good. But I still believe in the future of this company. Every merchant still needs some sort of point of sale system or even like an online system, and LSPD is just in the right market for that. For that reason, I think the sell-off has been a little tight. I already own some shares that I purchased earlier, so I'm not going to be adding more to my position, but I do think LSPD is a stock to buy right now. Alright, the fourth stock on this list is a little different from all the other stocks, but it's Alibaba stock, or ticker symbol BABA. Now there's been a lot of controversy. The ex-CEO Jack Ma, he kind of criticized some of China's policies and he went into hiding, but he's kind of okay now. And the stock took a huge hit, but I think it's set to just instantly recover, take its place back among the China tech giants, and I think it's pretty much unstoppable at this point. The biggest risk again is China coming in, completely shutting them down. I think they forced them to give, I don't know, some billions of dollars into some tech innovation fund. But basically, the government is the thing that provides the risk for this stock. Their business model is pretty sound. I think it's sitting around 160 US dollars right now. I can see it hitting over 200 in the near term future pretty quickly. Alright, and now at number 5, we have the riskiest stock of the bunch, Very Good Food stock. Right now it's trading under $2, which is absolutely crazy. It was a buy for me at about $3, sold under $2 is definitely a buy. That's 33% lower, and it's just very low psychologically. Now they're almost straight down trajectory, I think from highs of $6 or $7. It's not typically a good sign. Of course, that $6-7 price was a little bit overhyped. People were kind of buying into things like Beyond Meat, Tattooed Chef, left, right, and center. It is a good food space to be in, but all the earnings are being hit and all their stocks are pretty much crumbling at the same time. So that's why this stock is the absolute riskiest. And if it's a thing like Beyond Meat, they're a big juggernaut. They have the capital to survive these poor earnings. But a smaller company like Very Good, they could just quickly go out of business. That's why it's the riskiest stock, but it also has the most reward, as it can go up till about $4 in a very short amount of time. So that's why I think it's worth the risk. I bought a few shares at about $2.14. Just gonna sit on them for a little bit. That's it for this video, guys. Hope you enjoyed it. Let me know what you think of the 5 stocks I listed, and let me know if you have a stock you want me to review in the comments below. Thank you so much for watching, and as always, have a good day and see you in the next video.